Good morning and welcome to Wednesday's Join the Dots. I looked at the markets this morning because they're making some moves around big levels. Silver has just gone under 50. Now I've said to all my clients, I always see 3 attempts to break a big figure, and especially an all-time high. We've seen 2 so far. This is the 3rd time we've dipped back under 50. So it could go to 46, could go to 47, 48, 49, I don't care, it's a journey. But what I'm thinking is once it goes through 50 this time, we're off to the races. And as Francis Hunt said, he sees 91. So hang on to that thought. If you're on the journey, hang on to it. Gold at 4,013 means that we're above 80 again. We're above 80 on gold silver. And I've given you lots of presentations. Lots of very clever people are telling you that that can fall to a ratio of 20. Well, Francis Hunt has 9.99 for shock effect, so say 10. So that's an 8 times appreciation silver over gold, and gold's going up anyway. So what's to lose? XRP 216, but more importantly, Bitcoin 89,510. 89, that's a psychological number, isn't it? It's gone through 90. Wonder if Michael Saylor's worried yet. And then we have the Shanghai index, which I just looked at this morning, down for the last 3 days, hovering under 4,000. And a lot of people won't realise this because, again, you see, a lot of people haven't started looking at this until it comes to a crisis, which is fair enough. You get more worried as a crisis approaches. You start to look for more information. The Shanghai index in 2007 was 6,000. 6,000. That's a peak which has never been recovered, okay? And we're now under 4,000. Now, what does that tell me? Well, that is a fantastic pattern, because when I first moved to Dubai in 2003, the stock market in Dubai peaked. I actually went down onto the floor of the exchange to have a look and see how exciting it was. And I thought, well, this is false. And of course, it crashed. But what followed in Dubai was a property boom. Because when you've had a stock market boom that fails, people look for something else to move into, so they go into property. And that's why you had the Dubai property boom, which then I predicted would fall 70% in 2008, and it did. It's since risen an awful lot, but what I'm saying is that there are patterns, and they're quite easy to see. So the Shanghai one was stock boom, crash, property boom, crash. Dubai was stock boom, crash, property boom, crash. Okay, we had US, Europe, tech boom, crash, property boom, crash. Things tend to come in cycles. So last few days I've been dripping into the conversation here a K-shaped economy, and also a silent but stealthy recession into depression. So, and then I'm going to look at some other news headline stories today. China, Japan. Okay, I mean, this is just sick, isn't it? The words that Consul General used about the new Japanese Prime Minister. It's almost like a war threat, isn't it? We're going to cut off her neck, they said. So, what do I see happening there? I think China is incredibly upset that it's infiltrated Japanese partners, got hammered in the election. That's what I see. You can disagree, it's fine. But that's why I think they're so upset. But the thing is, if this continues, what does it mean for China? It means they lose another huge country's exports. They're already struggling with American exports. They're struggling with EU exports, and there are more and more and more things coming out the EU. Restrictions, qualifications, all sorts of things coming out the EU on China imports. And if they lose Japan as well, that will be the number 1 economy. Number 2, you can say Europe if you add it all together. And then Japan, number 4. They're losing export markets hand over fist. And that's the only leg they've got left on their stool, isn't it? And I think it's already cracked. It's wobbling. Okay, so this is very important. Very important. I looked around. I was going to do property this week, and I will find some property stories. Most of the stories coming out now, or most of the truth coming out, is about the economies rather than specifically property. And I saw one on UK graduates exasperated by high unemployment. It's a piece in The Guardian. I'll link it so that you can read it yourself. It's not that long. But it goes to the whole silent recession. It's happening. And these sort of numbers, 15.3%, again, the highest in a long time. Why? Because we're already in the recession. We just won't acknowledge it. But all the numbers are telling us we're in it. They're telling us the unemployment numbers, the consumption numbers. We're in the recession, just you, as always, are not going to know until it smacks you in the face. Okay? You're just not going to know. No, I went to New Zealand as well. No, I didn't. I'm talking about figuratively here. I went to New Zealand and had a look at their thing. And again, they've got the same problem. All the youngsters, no jobs. No, and if they can get a job, it's so badly paid relative to Australia across the straits there that they're moving. So here was a fascinating piece. I'll link it, number 2, just out of interest. There is no chance of owning a house in New Zealand, says the Kiwi, who's moved to Australia. However, go to Australia and you find there's no chance of owning a house. Do you remember 40% of all Australian houses are investment properties? You know, it's not an economy. It's not a country. It's not a country. Okay, you're almost Victorian times, aren't you? The rich own property and the poor rent. Rent is society. Victorian England. That's how far we've gone backwards through this sick financial escapade we've been on for the last 10, 20, 30 years, especially with property. You remember, again, you have to go back to 2009, you have to think of the crash, and you have to think, what did zero interest rates do to everyone who had money in the bank? They went and bought a property because they couldn't get any income. And they want income, they're old-fashioned. They believe they deserve income for their capital. Not some fake economist sitting in the Bank of England saying, oh, we need zero rates, otherwise the economy won't recover. We've corrupted the whole of society. We've turned it into a Victorian age of those who have property, those who don't. The K. It's this way, isn't it? The K-shaped economy. The poor are getting poorer, the rich are getting richer, and that leads to recession, depression, because it's the poor and the middle who spend the money, not the rich. They don't spend that much money. Okay, they invest it. But the poor and the middle class spend their money, and if they don't get any, they can't spend it. UK property, link 3, again The Guardian, this one. 2/3, and this I'm going to project a little bit here. I'm going to project forwards, okay? We've got the budget coming up. There's only one way. She's been smashed on income tax and trying to do that. There's only one way they can make money now, and it's from property tax. That's how they make money. So they're going to go for properties. That's my prediction. It is a prediction. Can't swear it's true. But they're going to hit properties. And what we're seeing in the UK at the moment is there's been, and this was a report in The Guardian, 2/3 of councils haven't prosecuted a single landlord. And there are only 64 prosecutions in 300,000 reported cases. Now, what I'm saying is if you put those two things together, you're likely to see now councils being incentivised to take these prosecutions and get fines. Okay, that's what I see. I might be wrong. That's what I see. I tend to see these things early before people join the dots. So watch the UK property market crash. And again, what does it mean? You're into a silent recession, but it will be more noisy when property starts to fall seriously. Last month, what was it? Down 1.8%. And all the talk is this is because of the threat of the budget. Well, that's like all the tariff talk on gold. Nah, just media noise, media garbage, isn't it? Garbled garbage, GG. Okay, then we go, and I've taken a trip to Pakistan now because I saw this story and I thought, yeah, that's the same again. Bank financing to the private sector comes to a total standstill. It's happening everywhere, okay? You may be at the front of the queue or the back of the queue. Pakistan are at the front of the queue. No more lending, okay? This is going to happen. Banks are not, well, they are stupid. Collectively, they are stupid. And I've worked in 3 big banks to know that they are stupid. And more importantly, when you sit from a macro view and look down on the world, you know that the banks are stupid. And you know that the decision makers are so divorced from the ground, from Main Street, from the actual decisions, they can't see what's happening, they can't feel what's happening, they have no clue. They're lost in a bubble of thinkers all thinking the same thing, until it turns, and then again they all think the same thing. And then they all have to react, don't they? And what happens? Liquidity disappears. It's happening in private equity, it's happening in commercial real estate, it's happening in private equity, okay, private credit. It's happening. Liquidity is disappearing. We'll have more on this. So that was Pakistan. Now, I wanted to talk, and I will talk for a few minutes about this article from Justin. Melbourne housing market breaking down. And I know I've got a lot of Aussies on the site, and I'm really grateful because I loved Australia. I spent 3 weeks there on the Gold Coast, and I also made Melbourne, and I made Sydney, and I went to the Gabba, and I did the Blue Mountains. I had a fantastic time. Okay, and I did the Bridge Walk, of course. So 1 in 4 families in Victoria are in mortgage stress. Mortgage arrears up 40% since last year. And this is middle income. This is not first time buyers. This is people with good jobs, doctors, nurses, teachers. These are people with professional jobs, and they're struggling, okay? Core members of society, not speculators, as I say. And when these crack, when the core members crack, which is what Greg's been saying all the time, they're destroying the middle class. It's what the K-shaped economy tells you. It's what the beverage curve from Eurodollar University tells you. They're all telling you the same thing. The middle class are getting smashed. Okay, they don't want a middle class. A middle class is the class that can actually do something when things get difficult or strange. Okay, the poor can't, the rich won't, because they're benefiting. So it's the middle who take action. They're being destroyed systematically across the world. The average mortgage rate in Australia is 6.4%, 6.4. Supermarket sales are down. And this is, again, you see, this is core economics, isn't it? It's not on the fringe. It's the core economy. Supermarket sales down, restaurant sales down, retail sales down. Melbourne average mortgage is 6 times annual income. When I first started in banking, you were allowed 2.5 plus the wife, 1. Or you were allowed 3 times the main salary, whether it's husband or wife, it didn't matter. 3 times the biggest salary, or 2.5 and 1. 6 times in Melbourne. Distress calls from income earners of 100 to 180k have doubled. Utility bills up 26% since 2003. Home insurance up 20%. Okay? Can you get the picture? Because it's destroying the middle class, and this is the aim. This is the aim of what is happened over the last 20, 30 years. Take out the middle class, because they're your only opposition. All right? So heavy stuff, but I'll come back to this. And I'll also talk about Lucy Connolly tomorrow, because Lucy Connolly has been offered, would you believe it, asylum in America. Can you see the macro view on that? The UK is now so bad that the US is offering an individual asylum in the US because of her political views. Wow. I'll leave it there. Thank you very much.